All right, guys. So two things. First things first. Welcome. Today is December 9th. We're headed towards the end of the year. Really quickly, I wanted to go through. When you go through our videos, or this first one up here, I'm going to change the picture. But if you want to go through our videos, click on this one, and it'll actually have chapters. So when you're studying and you say, what was that yellow bar or what was that antenna bar, you can click directly on these little hyperlinks and it'll take you right to that spot in the video. So make sure you're using that video with the table of contents if you're looking for anything like replay or downloading data or building charts for replay. That's a big one that a lot of people go through. Now, what I've done, and again, I mean, we've written a plan, right? And we've written a syllabus for you guys. And in the syllabus and in the plan, the idea is that we're kind of constructing thoughts for you and helping you out with the process of what to look for and when to look for it. In the syllabus, okay, I want to go through this real quick because this is really big, I think. In the syllabus, we talk about going for trading results. We have education page, we have screen capture tools, we have YouTube, we have a complete list of educational resources, and basically has everything. So it just kind of in a one-stop shop. So check the syllabus for that for page 2. Now, the other thing that we're going through, again, as you guys are
Stop
going through
filled.
learning our software and going through the process, you get a demo and you see what we do and you start learning what you're going to be learning over the next 3 to 6, 12 months of your life. You're going to spend time watching videos, loading the software, checking out the classes, hopefully the one-on-one class in the afternoon at 2 o'clock. And you're going to start studying high probability patterns, fibs, and triggers, and getting a good understanding of when something's going to hold or not hold. And then you're going to start learning termination conditions and you'll start recognizing what tops and bottoms are. And then you're going to start working on your divergence fine tuning, right? And understanding when to ignore divergence or when to pay attention to divergence. And then you're going to work on building your own trading plan. Now, this is where we're going to stop today. Because what I've done is I've done this for you, and you can always tweak it and change it and do what you want with it. But I wanted to give you guys a head start on this. So, and I'm not talking about the plan on the website because this is your general information. I'm talking about a working document that is your guideline that you're going to follow come hell or high water. Everybody understand that? And you have to have this document because it's going to protect you from yourself. So, and this is essentially what, Melinda and myself are using. So I just wanted to make a copy of it, a simple copy, so you guys can have essentially the exact same thing we have with all modern pictures and all modern thoughts in here. Now, we're going to start with the daily goal. And I wanted to talk about each of these components in here, and maybe I'll blow this up so you can see it a little bit better. But we're going to talk about the daily goal first. And this is mine, so this is not yours. Okay, I want you to understand this. My daily goal is to make 500 to 800 per contract per day. Now, that's the objective. Sometimes you get there, sometimes you don't. So you have to think about a loss. And what I did is I put a max loss in here. So let's say the day starts, okay? And we just lose for whatever reason, okay? So 550 per contract is where I put the cutoff. It's a little bit larger, but essentially what that means is that you've lost 4 S&P trades in a row for all intents and purposes. If you go over 4 losers in a row on the S&P, Shut it down. Don't do anything bad, worse to yourself. Check yourself and your setups. Because you have to really get in there and spend some time and say, did I do everything perfectly? You have to really do an honest assessment. Don't trade again. Now, I wanted to highlight this section right here, because I've had a lot of traders over the years. They'll get up $900 and then they lose their whole 900 plus 550. You can't lose 1450. This is 550 from the highest profit level on the day. So if you get up $200 and then you're down 350 on the day, you're going to stop. If you get up, $500, obviously you got to start thinking about the second half, which is a trailing stop. But again, if you get up $200 or $300, you don't want to lose 900 before you stop. You want to lose 550. So think of it as a trailing stop on the day, okay? And then, if you reach $500 or $800, you may think about implementing a $200 per contract trailing risk. That'll usually give you 2 trades. So if you lose 2 trades in a row, you're going to be done. And, if you never hit it, there's days where the market just gives and gives and gives. If you never hit it, keep trading until you hit $1,600 in profit, which is twice the max daily goal. And again, I know you don't have to implement these rules, but these are the rules that we're going to implement in my house. Okay, so I'm talking about me and mine, and you do as you wish. But if you hit a max loss, stop. There's always another day, and you end up doing more damage than good if you're not winning. If you get up $400 and then you get up $800, using or implementing some type of trailing stop for yourself is a really good idea, because sometimes they keep giving and you want to keep taking as long as they keep giving. Now, there is a number, 1600, that in my house will stop no matter what. If you hit $1,600 and it's 9 a.m., you're done. That's it. It doesn't matter what happens next. It doesn't matter if they give away 2,000 more. This is my version, just so you know what it is. Okay? You don't need a widget. You need a foot in the butt, Ken. You don't need a widget to help you do this. You just need to make a rule and follow it. That's it. You can put a widget on your computer that would stop you from doing these things, but my personal opinion is if you really need a widget to make you follow your rules, you're not really believing and solidified in your rules yet. Just my thought. Not that it would hurt. I'm not saying it's a bad idea. Whatever it takes for you guys to implement rules is what it takes. Okay? Period. Whatever it takes for you to implement rules is what it takes. So now we'll get into trade setups. Okay? Trend trade setups, and these are going to look horrifically familiar to you. All 3 charts must agree the 14-2-5-1 and market flow 8 range chart. Okay, so here's an example of that trade. I'm not going to put many in a plan, because if you need many, then you just don't know what the look is, but it's really going to be obvious, right? This was one of the short looks from this morning, right? And even other people put this trade in, but strong triggers down, pullback. Notice all 3 charts triggers agree. Everything agrees on all the charts. That's what you're looking for. Now, the second example, again, I could do 100 examples, but I don't think you need 100 examples of everything is perfect, do you? It's perfect strong triggers, everything is in alignment at the exact same spot. Does everybody understand this trade? You can watch the videos and you can see these a million times. If it's perfect, you got to go. Period. Right? So I don't think anybody has much trouble with a perfect look. Now, the next, as we kind of go forward, so again, perfect trend trades are perfect trend trades. I don't think anybody has much trouble with that. example trades from the edges with the bigger trend. And, again, when you're trying to go the other way the first time, is what we're talking about. Usually it's a one and done. You don't keep trying to sell the top and trying to sell the top and trying to sell the top. If it doesn't really go, then it's probably not yet ready. So on the edges, all the edge trades must have a market flow signal or pretty much no exception to that. I mean, there may be a pivot stop out, which I do have covered. And I'm talking about a yellow bar, antenna bar, stranded buyers or sellers. So here's your example picture. And I want you to keep in mind there's a rule on my stop on this one too. So you guys will remember this trade. It's not like you haven't ever seen it before, right? Find the edge, assuming that the large charts agree, and then after the market flow signal, this case it's an antenna bar, you're going to get in and you're going to put your stop below the low a couple ticks, and that's it. It either goes or it doesn't. It either goes all the way or it doesn't. And you can take half and then half if depending on what, how you're doing it. Everybody understand this picture? The 21.3 or the 14.2 has to say yes. And you have to have in this plan a market flow signal or you can't take a trade. Period. That's the rule. Does everybody understand the rule? I'll look at the second example in this plan. And again, you're going to say, wow, that's almost exactly like what you teach us anyway. And it is. I'm not coming up with anything new here. So here's the next example. And again, this is literally straight out of the videos and everything else. But again, I'm not inventing anything new. Not a great bottom, so we're going to try to sell the edge. And then here's the other part of it right here. After the market flow signal, you'll get in. You can take half off at trouble. And then no matter what happens, the runner, once you get to something, break even plus one, no matter what. No exceptions, no, I think it might go, no. You will not lose money no matter what if you do an edge trade and you run into something. Does everybody understand that rule? Because sometimes they hit something in reverse and sometimes they hit something and break it. You don't know what's going to happen, so you can take some if you're trading two, or if you're just trading one, don't freaking lose. Period. All right? I mean, that's basically it. Now, if you get to a top, it's trending up and it gets to a top, or trending down and you get to a bottom, eventually you're going to try to buy the first turnaround, right? I mean, that's basically what we do, right? And you've seen the old pictures before, but it's basically the same thing. You get to the top or bottom that you think should be a good spot because of termination conditions or, conditions like high or low divergences, two divergences, pivot stop outs, whatever, all the conditions, right? I'm not going through them again here. You should know what the top and bottom conditions are when you're writing your plan. So if your triggers on the 5-1 and the market flow chart must agree, you can take a trade. And when you guys watch our market flow video, this is where your high volume lines help out. And again, look, I put a bunch of examples of this one in here because this one gets used a lot. Okay? So we're going to go through the examples in my plan here. And 14.2 chart is good for trend longs due to a good bottom. And the good bottom was the large triggers are up. We had divergence. Fibs hold, right? That's all you need. All you need is a good bottom. And then you can start taking trades, right, on your smaller chart. But you got to have your market flow agree or your market flow triggers rolling up, right? These triggers have to be helping the thought of a bottom over here. If you bought the bottom, that's a different story. But if you're waiting for the bottom and then the first turn, you got to have the bottom and then the first turn. Everybody understand this one? So you're not trying to buy the bottom. You're recognizing it, but then getting in after. So it's, and look, this is the exact same trade we did in 2004, 2005, right? We waited for a top, we waited for triggers to roll, and we sold a pullback into the triggers, and that was our trade back in 2004-5. Same trade today, getting a bottom, but then using the smaller charts to fine tune that entry. Everybody okay with that? Anybody have questions? All right. The next example in my plan, it's almost the same thing, just 4 or 5 different ways. Right? We had this one in the S&P the other day, if you guys remember correctly. Remember the slow day in the S&P on the 7th? We're like, oh, we waited 3 hours for this to happen. And then it happened, and it was great, and that's cool, but
Order
it actually took 3 hours for this to happen. Anyway, with that being said, top is good, and then as the trigger lines roll on your maybe 5-1 and your 8 range chart, you have what? You have high volume areas to pull back to, which is, right around your fibs, and we're trying to get that spot on the way back up. It actually went up, made a pivot stop out, and then went back down, but survived with a 3-point stop. It's waiting and waiting and waiting and waiting, and then when it says it's okay, go ahead and go. Everybody with me on that? Feel good about it? All right, next one. Using momentum entry because of a 14-2 bottom. So it's a little different. It's the same concept, but maybe a little bit of a different entry. It kind of depends on what presents itself at the top or bottom. So, you guys will recognize this as one of the best termination bottoms we ever have, right? Small triggers above the large with the edge and a pivot stop out. It's the bottom, right? And this is right. I mean, most traders are going to be getting in over here at the 1-to-1s. However, if you're waiting for a roll, this is all you need. Strong momentum on your small triggers with a little pullback, and you're off to the races. This is in our plan too. It's not like, if you go into our plan, there's actually no difference between that and, this look. So it's not like we invented anything different. It's, you recognize the bottom, and if you're not buying the bottom, assertively with the market flow, then you might need to get in later after the fibs and triggers agree. Easy enough? Good bottom, then waiting for strong triggers. It works most of the time. Strong bottom, even with a different trigger, strong triggers and fibs still work. Everybody okay with that? All right. If you have questions, let me know. You guys have a copy of this now. If you haven't done so, go into your event board and you can download a copy of this. So you have one for yourself. Events board, download a copy for yourself. You'll have it in there. All right, now the next one, let's go through. Make this just a little smaller. A resumption of a bigger trend. sometimes the trend stalls and then ultimately the market will start going back up again. So, it kind of turns back into a trend trade for all intents and purposes. But you guys are very familiar with this, you know, higher high, lower low, or lower, higher low divergence. If the trend has been up and for some reason they took a pause, once they make a higher low divergence and the triggers roll back up, you're kind of using this quote unquote momentum style look. But it's this look right here at these triggers. Just trying to buy that little pullbacks because it's the only thing that's going to get you in if it's going to take back off again. Anyway, this little momentum look right here, you guys will get real familiar with and feel really good about. All right, so let's go on unless you guys have a question. Everything is with the triggers in your favor, pretty much. There's very, very little that has anything. Now, if you're doing from a top or bottom, the first time you get to a trouble spot, no losing is allowed. Meaning, let me show you the picture, okay? If you go long because of an edge, the first time you get to any type of trouble spot, get to break even. No matter what happens next, it doesn't matter. Sometimes they keep going, sometimes they fail. But if you reach trouble after the first counter, you have to protect yourself. We will anyway. You don't have to, but you should. Right? Or maybe risk 3 or 4 ticks behind a market flow bar or something, but very, very small stop. Everybody okay with this? Break even is good, but sometimes you got to give yourself a couple of ticks of risk. Again, you'll have a feel for the trend and what the market is saying at any given time. But 4 or 5 ticks risk max. So worst case, you're only risking a few ticks to make 7 S&P points. Those odds go a long way. You don't have to hit all of them, just a couple of them. So that's it for rules. And you've noticed the common theme, right? I think with the triggers, with a trigger, with a trigger, or, one exception with a market flow, but that's about it. Now, for management, fibs and triggers, go figure, huh? For management, I want you to see, and again, this is where we've got it set up in my house and what we're going to run in my house. You guys feel free to do as you wish. I'll put some dollar signs on those. So profit targets preset are going to be $200 and $400. The only exception is if you get a triple trigger strong look, then you can go for more. But you're going to lock in 200 at 400, no matter what. You don't want to get up $400 and give away all your money and lose money. You got to get paid for the effort. You can always get back in if there's a new trade, but winning is so important. Sure enough. It said lock, didn't it? Now it's lock. Anyway, all right. Hold runners if all charts have strong triggers outside. Now, I did this one the other day, and we did this one in class, and I made a mistake. I want you to see it because, again, I try to be in the mistake. I mean, the trade is easy, right? I mean, higher low divergence, fibs, triggers, so we got in. So that was the easy part. Could have been an add-on in this trade because there was a second signal that was higher than the first. And took actually 250 on the first one, but you get the idea. And then didn't wait till it was up 400 to lock, and I started looking at the market flow, and of course I'm did something really silly, which was get myself out because of one bar. The idea is if the triggers are outside on all three charts, hang on, you almost every time will make more money. With very rare exception. So ideally, the fib should have been the target. So it should have been from 42 up to 91, give or take. So, that little thing right there will cost you $200 or $300. So you have to be careful about not getting, jumpy if all three triggers are outside on all the charts. Hold your water, you're going to make more. Everybody understand that? When the triggers are outside of each other and strong and there's nothing in the way, hang on. This is not hanging on, but the rule is to hang on. Everybody give me a why you understand the rule. All right. Now, you guys know this one. You've heard it a million times if you've heard it once now. Manage if you have the wrong color background and divergence potential. So take the money if you hit something strong like a high volume area or trigger against you or a 1-to-1, right? Take the money if it's the wrong background color. You can always get in again later. If all three triggers are strong, then you might not want to take the money, but usually trend trades start to fade out if the background colors are wrong. Here's an example of that, and you guys have seen, 52 of these in the video, so it's not like this is a new concept. This was short on crude oil and recognize that if there's a green background, take your first profit at 200 or any line that might cause trouble. And I've got a second picture in here too, showing you an after on this. So here's an after. If you were short, which you should have been, after you have either a high volume area or a divergence with a green background and 3 bars up basically on your 5-1 chart, which is what it takes to be sure divergence is through. So you're going to literally trail your stop 3 ticks behind the reversal bar marker on your 5-1 as a max risk. So ideally you were getting short here and you weren't losing anything. Maybe you took half off because of the high volume area, maybe not. But the whole plan is geared towards not losing, not losing, not losing. Every once in a while, it's going to run off without you and you're not going to get, you're not going to get all of the money and you're going to have to be able to live with that. Sometimes they'll give you a second chance to get in, sometimes they won't. There's always more trades coming. And then finally, this has been a staple for about 32 years, but I'll show you a picture of it anyway. 3 divergences on the small chart tells you to get out. More specifically, if the third divergence is closing below all of your triggers, guess what happens? It really goes down. So, this also kind of incorporates the idea that if your divergences are above your triggers, it's not quite as bad. If the divergence closes below your triggers, it's really bad for you. Everybody understand that? If the third divergence closes below your triggers, and the background color went red too, but you get the idea. If you were long, which you should have been somewhere, you have to get out no matter whether you like it or not. And you can always recalibrate and do another trade later. Most of the time, you'll save yourself a lot of money by not hanging on for dear life. It's hard because psychologically, you're like, man, I have committed so much of my heart and soul to taking this trade, and to get out is a tough thing to do. So it's something that you're going to have to practice quite a bit. The third bar, when it plots, you technically have your second bar. True, Jay. So again, the stop management, we talked about it. Just to reiterate, say it one more time just for the heck of it. Three ticks behind a 5-1 reversal bar marker. So it'll basically be on your third bar up. After the second bar is true, you'll be out. Arian, if you have 3 divergences and you're below your triggers, would you want to stay in a trend trade on your small chart? So, look, you guys are going to have to research this yourself and figure out what's best for you and when and why and how and what. I'm just giving you a plan that you can start trading immediately once you understand it. But look, 3 divergences from relatively the same area, and then the third divergence closes below your large triggers and below your small triggers. See how it closed below all your triggers here, Arian? So you're looking at the close because this is where you're getting out. You're not looking at where it plotted divergence. You're looking at where divergence became true. And again, it's tempting to go, well, let me just hang in there for dear life and see what happens. And then you end up giving away all of your money. So again, these are some absolute rules. Wrong color background with divergence, pivot stop out with divergence, 3 divergences, recalibrate. And that's it. Again, I think the most important part of this, look, once you get the rules are pretty straightforward, right? This right here is really important, guys. You really, really, really have to have this part of it down. 550 per contract from the highest profit level on the day. So if you make 325, then you're only going to risk 225 max on the day. Got it? If you lose 600 bucks in a row, you're not doing something right. You're trying too hard, usually. If you're up 800 bucks, lock in 600, keep trading. If you hit 1600, stop. That's it. I mean, that's basically a whole trading plan, start to finish. I mean, you're just essentially doing what you're supposed to do, but this is it. That's the whole trading plan right there. I mean, that's like a personalized trading plan. If you want to make tweaks to it or changes to it, you're more than welcome. But this should get you started with more than you can probably handle for the first few months. So once you've perfected all of these, then you'll be ready to go live. However long it takes you. Some people are smart and quick and fast and work hard and you'll get it done in a month or two. Some of you not so much and it's going to take you longer. I had a guy the other day on a comment. He said, "Oh, you promised that we'd get it in 6 months." I'm like, you are crazy. You can understand the method in weeks, I think. I mean, I don't think anybody has a problem with the actual trades or the rules. You understand them, but it's not a matter of whether you understand the rules or not. Trading successfully is about believing the rules so much that you'll put your trade on, and whether you win, lose, or draw, you don't care. You'll do it anyway. That's the secret. You'll have a trade that looks so good, you'll put it on regardless of how you think or feel, and you'll do it every single time regardless of the outcome. That's when you're ready. Not when you know it, when you believe it. How long does it take you to build belief? Some of you, it's a lot quicker because you've got experience and you know what you're looking at and you've worked through your emotions. Some of you are going to take a lot longer because you're emotionally not ready for what's about to happen to you. And I know, everybody likes to think they're a mature person, but day trading will expose how mature you really are. After you build your plan, if you need help, feel free. I wrote the plan for you, so it's not like you really have to do much. Full participation in live and simulated trading. This is what you're supposed to be doing in class. Continued simulation, building an unshakable trust in your plan's patterns. Finalizing your trading plan for real money with financial boundaries, which is what I did for you just now. Really simple, right? It's not complicated. You may tweak that number a little bit. You may do something a little bigger, smaller, whatever, depending on your personality or your goals or objectives. It has to be yours. And then ultimately, this right here, step 9 and beyond, emotionally challenging yourself. Making sure that your live simulation is perfectly in line with your rules. Replay, trade tracking, make sure you're doing it right. I always say traders continue to improve for 1 to 5 years, which is a lie. They continue to improve forever. Everybody gets better always and forever, which is a good thing. It's imperative that your live money trading mimics your simulation results. If not, you've lied to yourself somewhere. You need to go back and figure it out. You may need to return to simulator a couple times, learning to control your emotions. Think about this for a second. Syncing the emotional control with the patterns is what's going to make you successful. Have you ever felt yourself getting so angry at the market? You have if you've ever traded. Of course you have. You're angry at the market. You're angry at yourself. You're angry at whatever. You have to sync yourself to say, you can't be mad. It's a rule. I follow my rule. I did it perfectly. It didn't win. It's okay. Next one. You have to be able to trade without it making you mad or sad or upset or worried or any of the other adjectives. Okay? Trade the high probability patterns. Don't do anything outside of the bright patterns, and that's it. This one right here, somebody should have told you long ago. It's imperative not to blow out your account while you're learning to control your emotions. Trade small. Use micros if you have to. Don't go blow out I had a trader not too long ago. He said, I'm starting with a 20 lot. Well, he didn't realize what he didn't know, and as he lost a bunch of money, he's like, now I'm going to trade a micro. So he lost 25 grand trading a 20 lot, and then he goes and trades a micro, and he's not happy making $30 a day. So you have to be very careful that you're simulating the same way you're going to trade. And like always, we're here for you to help you through the process of learning. There's not a lot we have to do. Everything that you need to know is in the educational. It's already in a plan. I just wrote another plan of the same stuff again. The syllabus, the plan, the software user guide, all of the video content, the main video with the chapters on it in case you want something specific. I think this is a pretty good list of most things that you might want to think about. And the biggest thing you're going to do is, this is on page 2 of the plan, the spreadsheet. You have to make this spreadsheet your own. And you have to spend time doing simulation and then replay at the end of the day. Trade during the day on sim, do replay at the end of the day, do it every day for months. You'll get it. There's no choice. You'll get it. But look, this is what a trading plan looks like. This is all I want. It's not about understanding the plan that's going to get you rich, guys. Do you understand this? It's about believing the trade setups and following the rules. That's the trick. Believe the setups and follow the rules. All right, I'll be done with that plan. If you guys have questions, let me know what they are real quick because I'll save them for the video that we recorded. If not, hopefully that's another good little video tool for you for your plan. All right, no questions? Good. Let me save this recording.